what's up? We are back with another stock analysis, and today we will be looking back into SolarEdge Technologies. Now, this is actually one of the first companies I reviewed on the channel, and it was also about 3 months ago, one of my first videos that actually got a decent amount of views. So we are going back into them today, taking a look at the financials. They just released their earnings probably a week or two ago. So we're going to see how they've been doing, go over some specific things that they've been working on. So big thing with them is reducing debt and also getting some kind of profitability and sales growth. So hopefully we can see some of that. Not sure though, so we're going to get into it. One other thing, my good friend has a channel where he does technical analysis and he covers this stock a lot. So I'll put a link in the description. Go check out his channel over at Dumpster Dive Trades. He does great technicals, but make sure to check that out. And yeah, let's get into SolarEdge today. Also, make sure to subscribe, and yeah, let's get into it. All right, so getting into SolarEdge, they obviously focus on solar energy. Some industry metrics, which I don't know if they had these last time. Inverters shipped, they're looking at steady estimated growth over 2025, which is great. Power optimizers, also steady growth over 2025. Battery capacity, steady growth. Inverters shipped, steady growth. Actually, a lot of growth there. And then average selling price, I don't know what that means, but doesn't have any numbers either way. Moving on, market cap is currently at 1 billion. So this company is very small. I compare it to Cerence every once in a while because it is very small, but it's also in an area where there is so much potential growth. And I think we'll kind of see that when looking through this company a little bit more. The only thing is, the difference I like to say that I've seen, because this is a company that I look into very frequently, Cerence had 2 or 3 earnings reports in a row where I saw improved financials and kind of results that were leading towards a pretty large stock increase. And this company, I think they're very, very close to that, and they're right on the edge of that happening, but I just haven't seen the results yet. I did not really look into the most recent earnings report though, so we're going to see what's going on there. But I just have not been seeing the results just yet where I really feel like I can buy it. My friend whose channel I mentioned earlier is a firm believer in the company, which I completely understand. If we look at the chart here, which we can see right here, this company had an insane valuation just about 2 to 3 years ago, all the way back to 2020, actually. And since then, they've fallen pretty hard. They did see a fairly large spike up a couple days ago, which I believe is a pretty good indicator that's saying there is more potential coming soon, at least in my opinion. The earnings report was negative on some aspects, which is understandable, but we're going to look into them a little bit more in a bit. So anyway, target price is right about in line with where we are. And again, that big stock jump a couple days ago kind of puts this current target price a little bit under, but I think this will be revised fairly soon. And long-term growth rate is pretty low, but I think that should be revised as well, because solar is probably, at least in my opinion, one of the power generation methods that has some of the best potential, just in my opinion. But looking at the long-term growth rates, there are some concerns here. So first of all, net income and EPS, very, very negative. Now, one thing I will say is that I believe they have fairly solid guidance right now that might change the way some of these estimates are showing up. Biggest thing here is the very, very positive sales growth. And also they have a 10-year estimate of very positive free cash flow growth. So those are positives there. But overall, we're seeing it being pretty mixed here, other than sales growth, which long-term is looking pretty good. So getting now, not the earnings, we want to get into the income statement now. Getting into the financials, we're going to see some things here. So 2024, very clearly rough for their sales. They saw a large increase over the COVID years, getting all the way up to $3 billion in sales, which is insane to think about. Then they started doing fairly large write-offs of their assets, which kind of led to a lot of things decreasing very quickly. They're in a very strong and aggressive restructuring of the company at the moment. I think one of the last big news events that happened for them was they sold off a segment of their business that just wasn't performing as well as they would have liked it to. So they just sold it off. And that, I think, is a step in the right direction for them. But overall, we're seeing a lot of sales decline currently. So this is not, I don't think this is the complete results of the last report. They don't have it updated just yet. But last report date, February 19th. So actually only 4 days ago. So this should be updated fairly soon. But we will be able to see that report either way and see the actual final numbers. But anyway, sales decreased. Gross income came a lot closer, which is good. Operating income, same thing. I like to think we're getting there. Compared to the last quarter, there was a lot of better numbers to be seen here. Net income was closer. And 2022, 2023, they saw positive net income and also positive sales growth. Since then, there has been a very aggressive fall off, and I think that comes with the restructuring of the company. So it's really just, can we get back to where we were? Let's actually move this out a couple more periods just to see how their sales have been looking. So they saw a very long period of positive net income, strong sales growth, and it was looking very, very good for the company. I mean, just 100 million plus net income after fairly solid still positivity, sales growth all throughout this period. And then since then, we just saw a very aggressive fall off. And I think that kind of comes with a global disinterest in the solar industry, which I believe is being revived now, or at least rethought of at the very least. But anyway, so sales have been decreasing fairly strongly. Total shares for them are slightly increasing, although not a ton. It's mostly staying the same. And other than that, let's get into the balance sheet now and see what's going on. So one thing that came with their sales drop-offs were very large write-offs on their assets, where they had to write down a lot of assets they had. So currently their assets are at 2.6 billion, coming down from nearly double that just about a year and a half ago. So really a lot of these decreases, a lot of it is property, plant, and equipment. That's about 300 million of decreases. They also have a decrease in cash from what they used to have. Their receivables are much lower. That accounts for about a billion. And other than that, inventories were written down a significant amount as well. And they're also just consistently lower than they used to be. Long-term investments are almost gone completely. They only have 88 million left after having upwards of $500 million or higher just about 2 years ago. So overall, it does not look great. One thing I will say is that during this time, they did work to reduce their debt a lot. However, they've now basically fully replaced that with short-term debt. So they did reduce their long-term significantly by more than half. Actually almost half of what it was. But as of the past 2 quarters, they essentially replaced that with short-term debt, which I guess is fine. They do have plenty of cash. They have 700 million compared to right around 800, just under 800 million in debt. So overall, that ratio is perfectly healthy and fine. But hopefully they can continue reducing that. Anyway, moving on to the cash flows now. Let's see what we're dealing with here. So cash flow negative for the past 2 years for their operating cash flows, which again, we saw a lot of growth. We saw a lot of consistency for a couple years, and now they've really fallen off along with that negative net income as well for 2024. So not great, but I think once we're through this period of kind of struggle for them, it will be very, very good, very beneficial for the company and investors. But it's just a matter of getting through this kind of restructuring time, and during a time when the industry isn't really seeing a ton of extra investment and interest. But we'll have to see what happens. I think there is a positive future for the company. Free cash flow has been negative for 3 years, though. So there were kind of some early warning signs here with the company where their free cash flow went negative in 2022, 2023, we saw it increase, and now here we are at 400 million negative in their free cash flow. So it was kind of an expected thing that we saw happening, or at the very least, there were a couple warning signs for the company that it was going to start kind of not going so well. I guess is the right way to put it. Looking at the kind of movement in their margins, we can see gross margin went aggressively negative just recently. SGA to sales has also been increasing a lot, which is pretty bad. Operating margin, very negative. Same thing with net margin. ROA, ROE basically the past year have been mostly negative. And just a reminder, this is the quarter plus the last 12 months as an average. So it's more of an average improvement, not just the quarter. Just keep that in mind. So the most recent quarter could have been better than this. It's just that we don't have the numbers. We only have fiscal year numbers, not fiscal quarters. So we're just going off of what we have here. One other thing, their debt to equity is still a fairly healthy position, at least with long term, it's at 60%. Total, however, is over 110%. So that's looking a little concerning. I would say that's not great at all. But either way, I think it's still manageable. It is something they'll just kind of have to overcome as a company. But anyway, moving on now to their recent earnings, let's see what's been going on here. So they did release their fiscal year report. So first, we're going to go through the metrics recap and see what kind of numbers we have. So again, this goes with the hopeful restructuring that I've been talking about, but gross margin massively missed by 37% or more. Operating income came in about 70 million negative. Operating margin came in way lower than expected. Optimizer units did ship more, which is something. However, they made no extra money off of those at all. Inverter units beat as well. Megawatts shipped beat also, and batteries came in a little bit below. So their actual products are beating estimates of what they're selling fairly significantly too. I mean, they came in 300,000 over with optimizers, and their megawatts shipped came in whatever 100, over 170 above, basically. So their products are mostly beating estimates. It's just that their profitability is nowhere to be found at all. So moving on, let's see. Okay, we do have street takeaways. So this will make things a lot easier for me to go over some things. So first of all, they show a lot of positivity here. And most of that is because of positive cash flow expected, which actually I do want to see that. So hopefully it shows it here because I want to go through the guidance first before we go through the street takeaways. So fourth quarter summary, important thing here was the asset valuation, which resulted in a write down. Total write down was about 138 million. So they essentially just lost that in assets right away. Other than that, the margins we kind of went through. Full year 2024, total write down in assets from 2024 was just over $1 billion. So not great. Excuse me, not great overall. Other than that, first quarter 2025 revenues to be within 195 to 215 million. So let's take a look at that while we're going through here. So the last quarter we saw revenues of 196. So they are expecting an improvement there. Next, non-GAAP gross margin to be 6 to 10%. So that is positive, which is good. Again, this is non-GAAP, however, so that could possibly be a negative GAAP gross margin, which would probably be fine, but overall not great. And also operating expenses 98 to 103 million. And we are mostly seeing that. We could probably find that in cash flows a little bit easier. I'm thinking about capital expenditures, not operating expenses. So overall, operating income will probably be a little bit affected by that, but I think that's just about where we're expecting it to be. But the revenue growth will be solid. So overall, it's okay. Other than that, I think most of this we did kind of look at. If you do want to pause here and go through this, go ahead now. And then, And then here's the full year 2024 summary. If you want to pause and go through that, you can do it now. And other than that, we'll go back into the street takeaways. So shares were up 15% after this. They their EPS mixed expectations, and it was lower year over year. Total cash of 400, just over 400 million. Positive free cash flow was achieved. Management notes generation of free cash flow ahead of schedule. So that is a little shocking to me. Can we go, do they have the quarters for their cash flows? So let's see here. Positive free cash flow. Okay. Somehow, this is preliminary still, so they don't have it completely updated. I can actually, if we really want to know, I can go into their earnings report and actually see it specifically. So annuals, releases, let's basic quarterly filing. Why do they not have the most recent here yet? Boy, does that annoy me. Earnings call. Earnings call. Okay, so they might not have it specifically here. So let's look through the fourth quarter summary and find free cash flow. Free cash flow generated 25.5 million compared to a deficit of 136 in the prior year. Okay, so they did have positive free cash flow, which is good. That's kind of surprising. And again, they said that is, what did they say here? 6 months ahead of schedule. That is pretty impressive. So overall, I would say sentiment positive following the quarter four loss. So um, really the focus apparently here is positive free cash flow, which does make sense. That's probably the most important thing. Future risks include the future of IRA and U.S. macro environment, as well as battery sector issues. Analysts are concerned of the don't know what that means, market share loss, and U.S. political risk. So again, with the current U.S. political situation, I believe the president, Donald Trump, is not very favorable of solar. So that is a big concern that a lot of people have for the company. But overall, I would say that is fine. I don't think solar companies are just going to be forgotten about. I think energy generation is more the priority rather than just killing solar. So overall, I think that'll be fine. Management guided quarter one for 2025 revenue in line with estimates, which is good. Near product line in the end of 2025, targeting the US and Germany. So they are expanding their products and expecting that to be complete near the end of 2025, which could be really good for revenue growth. And other than that, everything looks fairly good. Revenue modestly beat. Lower margins. Okay, lower margins were impacted by the impairments and write-off. So that does, I guess, make sense for why they were so bad. But still, revenues declining 64% year over year. That is just atrocious. But even still, target raised, target raised, target raised, and target raised. So either way, that's it. It's looks good for the company. There's a lot of potential here. There's a lot of possibilities that can happen. Looking back into their chart, you could see they were very, very optimistic for that report, up almost 16% on the day. And I think we will be seeing a new floor forming here for the company. So I believe the low point was probably that $10 point that they hit after their last earnings report. And from here on out, it'll probably hold support just based on the new optimism. Some things that might make it break that support are probably just general market conditions, I'd imagine. But overall, I think we are going to start seeing the bounce here. Now, does that mean that I consider this to be a buy? Possibly. However, I'm still not really seeing the financial results that I would like to see for me to comfortably say that it could be a buy. But overall, I would say it looks good. And that's really all I got. So thanks so much for watching SolarEdge review today. Appreciate it. Make sure to subscribe if you enjoyed, or just subscribe if you didn't enjoy. That's okay too. And yeah, that's all I got. So see everybody in the next video.